right, guys, back at it again. Chris and Lee worldwide, wide.
All the YouTubes. We are on the YouTube.
Oh, no. They can't hear me on TikTok.
What?
They can't even hear me, man.
Dude, you have one job.
I got 15 jobs.
No, you have one job.
Oh, I got 15.
One.
15. There's 14 you don't know about.
All right.
I don't tell you stuff because I keep secrets.
Dude, you shouldn't keep secrets.
So what if I have a schmony slans?
Do I get half of that money too?
I don't know, man. You can show your feet.
You make things weird all the time.
All right, guys. You know the drill. Questions about real estate, mortgages, interest rates, all that good stuff. Sometimes we talk about aliens. Sometimes we talk about Joe Rogan. Sometimes we talk about
Maybe
Tucker
Joe
Carlson.
Rogan is an alien. You ever thought about that?
Oh, yeah.
Have you ever put your information on that particular situation?
No one even knows what you're
Probably
talking
not.
about. No one even
Probably
knows.
not. Probably not.
No one even knows.
Rates today.
Stupid.
Rates today. 5.75.
These aren't today's rates.
5.75. These are Friday's rates. Because today is an official holiday. What day is it? What day is it?
Martin Luther King's birthday.
Is it?
Oh.
No, I don't think so. I don't
Lincoln's
think so.
birthday.
I don't think so. I know
President's Day.
that the bank is closed, and I know that
President's Day.
you and I are here.
President's Day.
I know there's nobody in operations here. No underwriters, no processors, nobody's here. Just us. Does that make us smart hustlers or dumb?
Congratulations.
Which
You
one do you
guys
think?
get to enjoy us.
Yeah, you get to enjoy us.
Yeah.
So let's talk about the different programs out there. Uh-oh.
Dude, I can hear me.
I can hear me. My favorite. I'm a favorite sound. I'm my favorite sound. What do you got?
So, you said you were going to talk about programs.
Well, like the Dream for All program. How is that coming along? What do you think? How do you think the Dream for All is coming along?
Well, I know that a lot of agents, even loan officers, that's the one that surprises me, are putting it out like it's the next coming, like it's the biggest wave of something that ever exists, and people are putting it out like they are the only special person that can do this, and you need to go to them in order to do this.
Like
and
it's their money.
Like it's their money. And I understand why, I guess. It's because most people aren't going to qualify for this program.
Most people are not.
They don't even know it.
Not even close. Do you know how long you cannot have owned a home for?
7 years.
7 years.
You know how long your dad could have not owned a home?
You know how long how long
Your estranged dad?
Yeah, you know how long your estranged dad could not have owned a home for?
Oh, man.
His whole life.
That sucks.
Yeah, if your parents ever owned a home, not qualified, not qualified,
Do not
not
pass
qualified.
go. Do not collect keys.
What are good resources to help you find down payment assistance? Okay.
Wow, official traps.
Official
TRX-PZ.
TRX. I like TRXs, man. TRX is pretty badass. TRX.
Official TRX.
Official TRX PZ.
In the house.
PZ.
In the house.
Okay, so there are a lot of down payment assistance programs. A ton of them. It's going to depend on where you live. So like if you're in California, off the top of my head, Calhafa, Platinum, Sapphire, Shanoa, Open Door, Dream for All. Help me. That's 6. I could probably keep going with 9 or 10. And these programs are applicable in California. I've done a series on our videos of where they're available in different states and counties, but every place deals with it a little bit different. Like, for instance, I'll give you California. We do business in all the states, so we do dig in. We find out what the down payment assistance program is. But they're not all great. They're not bad, but they're not great. And here's why.
And Abinab Saad, it's not that easy just to Google it. I mean, they're going to tell you there's programs everywhere, and it's so easy. That's not the best way to go.
Yeah, and for starters, the banks. So let's say that I was an unscrupulous guy just trying to get some clients, no matter what.
Are you acoustic?
Are we acoustic? Yeah, I don't know what that means.
I think he meant autistic.
Autistic? Yeah, I'm autistic. Autistic? Am I acoustic?
Not you.
I'm acoustic, autistic. I don't know. Anyway, what I would do is I would buy a website that says Zero Down Programs California.com, and it would sound nice and official. But the truth is, it's mine. It's a marketing gig, and I would go, hey, you want this down payment assistance program? Call me. Call me. So if you're looking for down payment assistance programs, one of the first things I'll tell you is only go to the .gov sites, because every state and area has a .gov site, and those people don't have an interest in getting you. They don't care. They'll help you. They won't help you. It's available to them. If you're going to, hey, this is ABC Down Payment Assistance Program, and it only is sponsored by ABC Bank, well, that's a proprietary marketing situation, which is not entirely bad, but you should know that you're being marketed to and somewhat deceived because there's a lot of programs out there. The truth is, if you have a good licensed loan officer who's experienced and knows his stuff and his area, there's going to be a lot of programs available. Now, here's the other catch. Your loan officer might be well informed, but the bank is not qualified. I'll give you an example. New American Funding, we are Cal HAFA program qualified, Dream for All program qualified, all these major programs, because we're a very big bank. We qualify and we meet all the requirements in order to do the Cal HAFAs, the Shadaps, the Shinoas, the Sapphires, the Platinums, the Open Door, the Home Ready, the Home Possible, all these different programs, and the bank qualifies for them. So you can have the LO, loan officer, you can have the LO that knows it, but the bank's not qualified. So you kind of have to do both, and you have to know somebody who's good with all of it. So depending on where you're at, and the Google search is, it exists, but I would go, hey, listen, if that's a .com or a .net or a .org, it's marketing. If it's a .gov, then it's an official website. And the official website will actually give you, hey, these are available here without a dog in the hunt. Because remember, all the banks are trying to get your business. There's a lot of money in a loan. A lot of money. Like how much money is in a loan? A lot of money. Let me give you an example. So let's say we have a $500,000 house. Not uncommon. In California, you can barely get a house for $500,000. But $500,000. How much money is on the real estate side and how much money is on the lending side? Ooh, I'm about to drop the tea, guys. I'm about to drop the dirt. Here's what it is. On a $500,000 house, one transaction, $500,000 house, listing side traditionally gets 3%. That's $15,000. Okay. Buyer side traditionally gets 3%. That's $15,000. Holy smokes, wait a minute. 15,000 and 15,000. So there's $30,000 in this? Yeah, that's just the loan. That's just the real estate side. Now let's go to the loan side. The loan side. How much do the loan officers make? How much does the bank make? As a rule, just put 3%. 3%. It's a little more complicated than that. Sometimes a point and a half, sometimes 4.5, but 3%. So $15,000. And then that's the front end of the loan. There's another side, which is the back end of the loan that most loan officers don't even know about. And that is when they sell the servicing rights. When they say, hey, listen, I'm going to sell this loan off to Mr. Cooper or to some servicer out there, and I'm going to make another 3, 4, 5, 6, 7 points sometimes. So
what's up, Sierra? Just
call it 3%. So there's 3% on the front end of the loan, which is $15,000. 3% on the back end of the loan, which is $15,000. That's $30,000. Well, if you take the real estate side and the loan side in this one transaction of a $500,000 house, there is $60,000. 60 grand. 60 grand. Now, remember, the banks and the realtors and everybody, they're doing this. They're trying to close. When we're doing great, we're closing a loan a day. A loan a day. 20 loans a month, 30 loans a month. We're doing great. That's a good month for us. It's a really good month. So if we're doing that, now do the math on that. It's insane amount of money. An insane. Anyway, I'm going to get to your questions here, but I just wanted to go down that little tangent for a second. Hopefully I'm helping you guys out.
Yeah, official TRX. Here's going to be my recommendation. Get with a loan officer that you know, like, and trust, and they will guide you. If you do all your research, you're going to run into a program that the loan officer that you know, like, and trust probably doesn't know about. But he probably has a program that does the same exact thing. It's just called a different name. So it's kind of an uphill battle, but you'll find a good loan officer. Or you can just call us.
You can call us. We'll help you out. Louisiana will help you out. And so here's a secret, a little New American Funding secret. Sometimes some programs out there are only available to a local loan officer who's gone through the local schooling. That does exist occasionally. So let's just say you were in ABC, Louisiana, and there's only a program that's only available in ABC, Louisiana. and you'd say, hey guys, I want to do this loan program, and I dig in and go, hey, I'm not authorized in ABC, Louisiana, unless I go through the courses and I did everything in there. However, all I have to do is put out an email to all loan officers in ABC, Louisiana. I'll say, hey, listen, John Doe, here's the thing. I got a client here. I'm going to walk this through. And you're going to finalize and make sure this client gets the program in ABC, Louisiana. Because we're New American Funding, because we're a big company, and because we have loan officers all across in all 50 states, we can pull this off with a real quick email and a phone call to follow up. So that does happen. We do it often.
JR661, is there an instance where an FHA loan would not be recommended for a first-time home buyer? And a couple come to mind instantly.
Tell me. I got my piece, but I want to hear yours.
Here's the first one.
Tell me.
When you're buying in a condo association, the association itself, the community needs to be FHA approved. So that absolutely would be a time where I recommend that you do not use an FHA. Why? Because you can't use financing inside of there. There's ways around it. We could do something called a spot approval, get the complex approved, and do that stuff. Sometimes it's a long shot. Sometimes it's not even possible. So that being said, there is an instance. Do you have one?
Oh, I've got a bunch of them, man.
Okay.
So JR661, an FHA loan is designed for the person who's trying to get their first home. That's usually, I'm just trying to get my legs under me and trying to really get things going. But let's just say you've really done well in your professional life. And you've got an 800 FICO score, $250,000 in the bank, and you want to buy a $400,000 house, and you're willing to put 20% down. No way on earth would I recommend you go FHA. Why? Because with the 800 FICO score, the DTI that you're presenting, and the LTV that you're presenting, a conventional will smoke that loan all day long. So if you're a pristine, perfect buyer with big down payment, great credit score, great income, I'd stay away from FHA. FHA is good. It's a good product. But if you're that perfect borrower, I go straight to conventional, no MI, because you're coming in with 20% or more, and you're getting great rates. So that's another instance.
There you go. What's up, Charlotte, North Carolina?
Charlotte, NX.
LGJ.
Dude, NX isn't North Carolina.
What's that?
NX is not North Carolina. Oh, it said NX before. I don't know. Maybe I'm losing my... It's
You
NX.
Look at
I got to catch up. I've had a lot of caffeine today. Back off.
LGJ.
Back off. I've had caffeine.
Connor Amato. Happy Monday, guys. How are we looking
Monday.
at rates today? 1%?
Yeah, 1%, man. 1%. Hey, Connor, just so you know, 5.75 15-year fixed conventional, 6.25. Now, that hasn't moved because the market's closed. So we're quoting you Friday's rates. Rates. It's going to get better, though. I think it's going to get a lot better.
LGJ, opinion on Homes for Heroes program?
LGJ. That sounds very LGJ-ish. And then he's got a fire and a banjo?
Sure.
Guitar?
Sure.
Violin?
Homes for Heroes is cool.
Yeah. Homes for Heroes. Well, Homes for Heroes is it's a bit of a misrepresentation. Here's why.
Marketing.
Yeah, it's a giant marketing thing. So here's what happens. They listen. There's these programs out there that think they're doing good for people, but they're not all the way doing good for people, and they try and railroad the LO and the realtor. And they say, hey guys, here's what we're going to do. We're going to help out the heroes. You're going to give up your commission, a lot of it, and we're going to give you the client. But all that money that you gave up to the client, well, the client's not getting all of it. We got to get paid too. So Homes for Heroes gets paid. There was actually a gigantic scam of how they were marketing it all types of wrong. Now, do I think it's a good program? It's an appropriate or just an inappropriate program. Just know that they go after the realtor's money and they go after the loan officer's money. And sometimes the loan officer can't participate because they ask for so much. It's illegal. True facts. So that happens.
All right, there you go.
Cool.
So 07734. How about credit repair company that charges nothing up front? You only pay if all negative accounts are removed, but cannot guarantee a specific outcome.
I don't trust people like that. I don't trust situations where somebody's not getting paid. There's a real simple rule I learned a long time ago. Free is never free. I'd rather pay somebody and know that this is what it is, because if somebody says, hey, just trust me, I'll do this for free. In fact, this happens to me a lot. I'll get somebody and say, hey, Lee, I have another loan officer, and he says he's going to do my loan for free. And I said, okay, cool. I get what you're saying. Is he your friend? Is he your like longtime friend, or maybe your cousin or your relative of some sort? They're like, no. He just said, I'm going to do it for free. And I said, okay, so I'm going to ask you one question, and I'm going to ask you it 3 times, and I want you to answer it honestly. Do you really think he's doing it for free? Really? I mean, really? And then after a pause, they'll say, well, since you put it that way, no. And I'm like, yeah. Let's figure this out. Because free is never free, man. There's people who say, hey, listen, and loan officers or salesmen, they know how to hide it in the truth. They'll say, hey, listen, no money out of your pocket. Don't worry about it. That doesn't mean free.
So 07734 is asking for an opinion about it. He's providing a service that puts no pressure on the client, and it's not free.
Yeah.
It's what's it called when you get something done and then get paid?
Pay for service, pay for deletion. No, pay for service. Yes,
No.
Service.
It's
results
driven. Yeah, results driven.
Yeah.
So he's trying to build a results driven business. But what he's saying is correct. Once the clients don't have skin in the game, don't have anything that they put or invested in, they really don't care.
It's kind of like when you put an EMD down and you're like, the EMD, earnest money deposit. You're like, hey, I'd like to offer on your house. Cool. How much are you willing to secure it to show that you're really serious? Well, nothing, but I still want to offer on it. You're like, I'm not so sure your offer is real. Well, somebody comes in and says, well, I'll put $100 to secure your $500,000 house. You're like, maybe. But if somebody walks in and says, hey, here's 10 grand earnest money deposit to show that I'm serious, that guy's not walking away. That guy, he's got 10 grand in the skin in the game. Rule of thumb, if somebody doesn't put skin into the game, there's no real vested interest for them to follow it through. That's just wisdom through the years.
Yep. What about raw land? How do I get a mortgage? We can hook you up with that. Just reach out to us.
Yeah.
Send us a text message. Give us a call. There's a static phone number here, guys. And then up top, there's a link that says stand.store. Click on that. Click apply now. We can start your process.
And I'm not so sure mortgage is the right word for raw land. It would be loan against raw land. And that's usually 50% or more down. It's not like 3.5%. That doesn't exist.
What's the average percent you pay to both realtors when you sell your home? Is it still 5% sale total?
Ben, Oneto,
Woo!
I don't know where you're at, but it's 6% where we're at. It's 3% listing side, 3% selling side. I'm in California. That's kind of the norm. Occasionally, the market will shift a little bit, and people will say, hey, I'm only paying realtors that show the house 1.5 points. Well, guess what? That one conveniently falls off of their clients to show them. Is it illegal? Yeah. But does it happen? Yeah. Yeah.
Okay, so this one's a little bit of a long process, but I got to walk it through because it deserves everything, and we're going to talk about Danny. So Danny said she was pretty upset with her process. She got everything she asked for, as soon as she didn't qualify, immediately she was dismissed, had to ask about the credit repair system, and even then she didn't seem to want to give me the info to the people. Seems like since I wasn't immediately a great customer option, I was dismissed, and I was a burden on her. It really turned me off. I really like y'all, but that hurt. She knew she may need some work to get where she wanted to be, but was ready for the hard work. When she was made to feel like a burden and not an immediate qualifier, it was kind of made her feel like she didn't want to work with her, someone I was going to only matter to when I qualify. Okay. And then finished with, no, I like them. It jumped on us. No, I like them. It was someone at their company that took on my account. Okay. So there's all that. So, Danny, we are the tip of the spear, Lee and I.
Spear?
The spear.
The spear?
I have an Altoid in my mouth.
Dude, you were trying to be all dramatic and shit.
Not everyone pays attention. Not everyone's looking to attack. Everyone wants the data. So, yes. So, we are the tip of the spear here, Danny. So, we are the ones in charge. We are the one who burden the responsibility. So do me a favor, send me a text message on 30581. I want to talk to you personally, okay? And let's make sure we can iron this out and make sure you're on the right path. I understand your experience wasn't the best, but we are going to turn it around and make sure you qualify for a home, okay?
Yeah.
So there's that.
Dude, you got a lisp going today. You okay? Nope, not anymore. That was a tooth.
Give me a hard time. Dude, I'll get rid of the problem right now.
His tooth out.
Right now. Okay. All right. So no pressure on the client. Yeah, we got that, Ryan. So hopefully you can give him good service.
Sierra. Is real estate school expensive? Nah, it's pretty cheap. Well, it depends on what you think expensive is. I think it's $400, $500, something like that. It's pretty cheap. More important is going to be your National Association of Realtors dues, which is still a thing but might disappear. There's actually another group that's starting to compete with them. Then you have to pay your yearly fees, and there's a lot of things. And then the marketing. It is expensive to be a realtor. If you're a professional realtor that actually has a CRM and marketing and pays for photos and pays for everything, it's very expensive. But to get into the business, the barrier to entry is very low. That's just why there's a lot of realtors. And why 90% will fail. That's not my words. National Association of Realtors and California Association of Realtors says 90% will be out of the business in 3 years. Do you know why? Because you never really got trained. The barrier to entry is very low. And when you don't make money, nobody cares. They're like, buy next.
What? Buy next like that?
Yep.
Home Goods are us. Do you even cover Maryland?
Do we even cover Maryland?
Dude, I don't know who Maryland is. I never met her.
Marilyn Monroe? All 50 states. All 50 states. We will work in all 50 states. Let's see what we got.
Let's see. Nat. What are the red flags in a realtor?
So, Nat. If you pick a realtor off their skills, off their history, you vet them. That's a very important part. Very important part. Then they need to have a good broker. The wrong reason to pick a realtor is because he's my cousin, my friend, my relative, pretty girl, good-looking guy. That's the wrong reason. The right reason is they've closed a whole bunch of deals and somebody recommended them. That's the best way to pick a realtor.
There you go.
Cool.
There you go. Team Sanchez in the house. Okay, got it. Thank you, Danny. No, I like them. Sierra. I'm not talking about Chris and Lee. They know that. Gotcha.
What's up,
we
Sierra?
love you guys. We love you all.
Love you guys. Hey, we try and help everybody, and this happens. Sometimes I'll pull somebody's credit, and they said, "Hey, Lee, I heard you can go down to 500 FICO," and I said, "Yes, I can." Cool. I pull the credit. You're like, "Hey, I got a 524 FICO." Okay, cool. Let me take a look at this. Oh, there's some issues here I can't get over. We need to send you to credit repair. You're not qualified right now. Now, is that true? Yes. Is it disheartening? Yes. But if I put you on a path and say, hey, get your 524 up to a 620 or a 660, and then we'll get you qualified, that's also true. But now you know where you're at.
Yeah.
Now, if there's something that created that 524 FICO, and I can't get around it, like, for instance, child support or bankruptcy or repossession just happened, or anything that I can't get around, I'm true in the guidelines can go down to 500, but your instance doesn't allow it. So I tell you, get this thing cleaned up. Here's the people we recommend to credit repair. We have some people that we recommend. We have somebody on our website. We have somebody in our links. Or you can hire somebody. There's a ton of people on TikTok. If you want to learn how to fix your credit, just go to TikTok Credit Repair. You will have, your algorithm will be full of people giving you advice. And some of it's really good. Some of it's really good. When we tell you this, and we tell you we do want to work with you, we'll pull your credit, and we'll tell you, hey, when you get to 620, we want to help you. But until then, we can't help.
We'll even pull your credit on President's Day.
Yes, on President's Day.
The banks are closed and kids are at home. And we leave our kids somewhere in the streets so that we can be here with you guys.
What are the chances
I don't even know where my children are.
550 credit and 100K down. Inky Primes, that's going to be what I just talked about. If the reason for your 550 is you haven't paid child support, you're probably not going to get qualified. Or you just BK'd 3 months ago, probably not going to get qualified. But if 2 years ago you had a problem and that's gone, but it hasn't showed up on your credit report, that's a really good situation. We might be able to get you qualified.
Keep going, man. Why are you stopping?
I'm just trying to read, dude.
What, you just learned?
Go, yeah.
You just learned?
Danny.
Be entertaining, man. Help me. At least you didn't pay $4K and never get qualified, said Sierra. I agree.
Yeah, I know. Did we pay you $4K?
Home goods are us. Tell me, do you work in Maryland?
Yes, we do. I told you that. We already did that.
But do you work in Maryland?
I just graduated from college, got a job. Do I get some buying power with no previous tax history? Yes. Krill. If you got a degree and you went into the field that you got a degree in, I can use your years of schooling as time in service, and that can meet the 2-year requirement. I do this very often with nurses, engineers. So they'll come out of nursing school, they got a nursing degree, they get a $150,000 a year job, and then boom, 1 month in, they're qualified to buy a house.
All right.
Cool, what do you got?
Danny's ready for the hard work. She swears she just needs to know what to do. Don't worry,
cool.
we got your back, Danny. We'll figure it out, okay? You got it, home goods are us. See,
We're here for you.
Yeah, made them laugh.
Yeah, make them laugh.
Sierra,
Make
if
them
you
laugh.
don't have a negative debt, how do you boost your credit? All right, I'll do this.
You do that.
You're not even entertaining.
I'm
man.
not entertaining.
Go back
dude.
to sleep.
Dude, I'll go back to sleep.
Okay, so here's what you're gonna do, Sierra. You need to get more trade lines. You need to get some positive on your credit. Okay, even if you don't have a lot of negative, you still need more positive. So what you do? Let's pretend for a second. Okay, this is my son. I'm his my grandson. I'm his grandfather. Okay.
That's good. That's going well.
It's going very good, actually,
good.
for them. They don't care about you anymore. They only focus on me.
All right.
So I'm grandson. He's grandpa. Now I say, hey, grandpa, I need help. I need to boost my credit. He said, what do you need, grandson? And I say, I need you to add me to your credit cards. The oldest ones, the better. The ones with zero balances, that's great too. Okay? And you're going to call your bank and you're going to say, hey, I want to add my grandson. His name's Chris Dominguez. And they're going to ask me for my social, my birthday, and my address. They're going to add me to the cards. Now what's going to happen is I'm going to receive all the good stuff that grandpa's been building, okay? He's been paying his bills on time, zero balances, $20,000 limits, zero balances. And once I get added to that, I get all that history that grandpa's been building. And overnight, almost overnight, I should say, you'll get 20 to 60 points, somewhere in that range, for each trade line that grandpa adds you to. So he can add you to 1 credit card, 2 credit cards, 3 credit cards, and you'll get that history. Now, will that get you approved? Not guaranteed, but it will definitely spike those scores to increase your chances drastically.
And you have to be an owner or an authorized user. Owner is better, but authorized user will also boost your credit score. Boost it.
And some banks don't even give you a choice. They're like, well, all we do is authorize. So just take whatever they can give you, but that's going to give you the right path. Either way, Sierra, you too, you got questions about your credit, just give us a call.
Yep.
We already know you.
15-year rates are coming in at 5.75 today. 5.75. 30-year, 6.25. 5.75 rate today. Don't believe me? Go to the link above us. Go to cool stuff, and then you'll see today's New American Funding quotes. By the way, the market is closed today, so they're actually quoting Friday's rates. 5.75 and then 6.25 on a 15-year fixed conventional, and a 30-year FHA 5.875, VA 5.875. So, what questions do we have? Where are you at?
I
Where
have
are you
questions.
Go ahead.
I have questions for
Good.
you guys.
Tell me.
So I'm trying to build this other thing, and I need your guys' help.
Okay.
Who knows a good real estate joke? Does anyone here know a good real estate joke? Just one. If you know it, go ahead
Team
and type it
Sanchez in the house. They're gonna know good real estate
I
jokes.
don't know, man. We'll see. B. Is AGI or gross income counted for qualification?
Okay, so AGI. Oh, which one is for AGI? It's AGI. So adjusted gross income or gross income.
Either Ness.
So
matter.
it's going to depend. Like, let's say you're self-employed, and you're self-employed, and I look at your tax returns, and I see, hey, listen, you made 40 grand for the year, and you're like, no, Lee, my company made a hell of a lot more. Cool, I'm gonna go deeper. Now that's your AGI, 40 grand. But then I go through your tax returns, and I see depreciation and depletion. Ooh, I can add back in depreciation and depletion, and let's just say you had
That
60.
excites you?
Yes,
Oh,
I had
wow.
$60,000. Well, now you're $40,000 plus 60,000 added back in. You're at 100 grand. So one of them was your AGI, and one of them was what I can add back in. So do we go straight off your gross? On a straight W-2, we can probably go off your gross, but if you have any bit of a complicated tax return, even a little bit, Schedule E, Schedule A, Schedule F will change your world. But if you have any of these things, then you need somebody who really understands calculating income in order to put this together and make sure that you're qualified for the most you can qualify for.
Why is F always associated with bad?
I don't know. Well, F is farming. And the problem with that is, hey, listen, the government says, hey, if you got your house, I got no problem repossessing your house. I have no problem. No problem. Wait a minute. You're a farmer and you make your living off of the house? I can't do that because I'm violating some type of laws. So Schedule F changes a loan like that.
B said, gracias. I don't speak Chinese. How do you say you're welcome in Chinese? Ness 720.
Shay Shay.
My guess is that your birthday is July 20th. I don't know. And your name is Vanessa. I don't know that. I'm just guessing.
Yep.
Just guessing.
Cool.
Refinance question. She's a new homeowner and the rate is 6.75. I don't know what the question is.
Yeah, give me a question.
What's the question, Ness? What's the question?
You're a new homeowner.
Vanessa, July 20th.
6.75. So that's a decent rate in today's market. Yeah, you're doing, if you just...
Oh, how does she want to?
How do you
the goal?
Okay.
I need to know your goal, Vanessa.
Yeah, if you know your goal.
Because if she doesn't have a goal and she just wants to lower her payment, what's your advice?
Well, here's the thing. If this is your forever home and you're going to be in it forever, and you're saying, hey, listen, I'd like to refinance, and you get a hold of a loan officer who has commission breath. All they want is a commission. They're going to tell you every 6 months, hey, 50 basis points, that's a good marker for you to refinance, or 75 basis points, or 100 basis points. But here's the key. Here's the reality. If you watch the markets, there's cycles, okay? So in this next cycle, Chairman of the Federal Reserve, Jerome Powell, has come out and he says, we believe we hit the peak of the cycle, which means we're already at the top, which is why interest rates starting getting better. And we believe there's going to be 3 to 6 interest rate reduction cuts in 2024, which means they're going to go down. But if you study that out just a little further, they actually believe there's going to be more in 25. So if you refinance, it's going to cost you money. Let's just say $3,000, sometimes less, sometimes more, but let's just say $3,000. It's going to cost you $3,000. If your loan officer says, hey, don't worry about it, no money out of pocket, that does not mean it doesn't cost you. That means that they tacked it on the back of the loan and you have to restart the clock at 30 years again. So any amount that you've paid and you think you've got 29 or 26 years left, no, you're back to 30 years. So you start the clock all over again. So when it's time to refinance, you have to do it strategically. And then you have to do it, in a best case scenario, one time, only one time, and then buy the rate down as deep as you can because you don't want to buy it down again. You want to do it one time and only one time. Now, if the LO that you use talked you into buying down to 6.75 and your par rate was 7.5, well, you're already, let's say that cost you $9,000 to do. $9,000. Well, there's a savings, a monthly savings, and there's a month mathematically when that $9,000 makes sense. If you don't make that month and you refinance prior to that, that actually cost you money. It was a bad move.
No buenos.
Yeah, there's a lot of information there, but I hope I helped you. Yeah,
so
I hope I helped you.
What that means, Vanessa, is if you're ready to refinance, you just give us a call. Time for commercial.
Yeah, if you need a badass loan, call Badass Loan Officer. Your badass loan officers are at New American Funding. Chris and Lee are at New American Funding. You can reach Chris and Lee by texting these numbers. We are here for you. This will disappear in 5, 4, 3, 2, 1. Cool.
Disappeared. Gone.
Yep.
Bye-bye.
Never to be seen again, but that's
right.
strategically placed.
Yeah. Okay, Nicole Dreams or Nicole Adams 519 wants to buy a house.
We want you to buy a house, Nicole. We want to help you.
And you just gave her the direction of what
I
to
gave
do.
you the direction.
Dude, you're way ahead of the game.
I'm way ahead of the game.
All right, we got Danette Garcia.
Okay.
If my daughter is on the deed, do I need a living trust to put her name on it? Again. So she's asking two different questions. It doesn't even know it.
Yeah. So a living trust is, you should consult an attorney for this stuff, but a living trust is a very powerful situation. In fact, anybody that owns a house should have a living trust, and that's the event that you should pass away. This way you don't land up in probate, because the living trust... Probate is when the government takes over because it was unclear what your affairs were going to be.
Do I want probate?
No, you don't want probate. If you
Why?
can avoid probate, you want it because it costs money and it takes money away from your estate and your heirs. Now, if you have a will will is a probatable item, which means it actually triggers probate. So people think, oh, I have my will. Yeah, that's going to go through probate. The judge is going to read it, and you're in probate. So there's cost. But in a perfect world, you want to be in a living trust, which will avoid probate. Now, that's different than your daughter on the deed, because the truth of the matter is if you finance the house and you put it into the trust, whoever the trustees are the people on the trust, because the person on the deed, the deed is going to be the living trust.
There
so
you go.
a little complicated, but yeah.
Booyah.
Oh, by the way, hire an attorney. I'm not an attorney.
He's not an attorney.
Mm-hmm.
Hector Sepulveda, my credit is low. I can afford a mortgage, but so lost on where to start and what to fix.
You go.
All right. Yugo was an old car from the 70s.
It is.
So you're going to call these guys.
Okay.
And they will advise you
Yeah.
on where to go, where to start, what to fix, what not to fix. And that's actually a really good question. A lot of people out there are probably thinking, that's dumb. These guys are loan officers. You
Yeah.
talk to them. No, not necessarily. But here's what I am going to tell you. Just like a doctor, we're going to run tests. We're going to credit, income, assets, liens, whatever you had in your situation, and we're going to see all the stuff right in front of us, and then we'll be able to go, okay, you don't qualify, but make an adjustment here, make an adjustment here, make an adjustment here. Do not pay this collection. Do not pay this debt, because a lot of people think that's the key, but and a lot of times it's going to hurt you negatively. So that being said, give us a call, Hector. We'll guide you, and you'll be a homeowner. If you listen to what we say, you will be a homeowner.
Okay.
User 7755. I want to get a HELOC. My current mortgage is 7.49. Is it possible to get a HELOC at a lower rate?
Probably not.
Yeah, no.
Probably not.
Not right now.
Yeah, probably not. Yeah, HELOCs. Well, first off, your primary mortgage is going to be the lowest interest rate you can get in that market. So you might have gotten it 6 months ago when the market was higher, but the market hasn't really changed that much. HELOCs are a more risky loan for the bank, and because of that, it gets complemented with the higher interest rates. HELOCs the interest rates are high.
Yeah, so if you want
Yeah.
cash, you can probably
Yeah.
do a cash out refinance for better than that right
Yeah,
now.
7.49. You probably beat 7.49 right now.
So still give us a
today.
call. We
Yeah,
can still help
today.
Ness said, yes, that's a lot.
Yes, it is a lot.
Thanks.
I don't know what you're talking about, but whatever.
You said it was a lot.
I
She said
don't
it's a
know.
lot. She
I don't
confirmed.
know, man.
We
I can't
know
give
you
you-
don't know.
I don't
It's
know.
not,
I
we're
don't
not
know.
Confused. Jazz, can I refinance without paying closing costs?
No, but they'll tell you. Well, they'll not really tell you. They'll be like, hey, don't worry about it. No cost. No, there's always closing costs. You know why? Because do you think that notary is going to go and re-sign the documents
I don't think they know what
for
closing costs
free?
is.
Do you think the notary is going to... Closing costs are all of the costs associated with closing. What is that? Title, escrow, notary, appraiser, a whole bunch of stuff that goes on. There's a bunch of things that go on. So do you think the appraiser is going to go, hey, listen, I'll do this for free because I like you? No, it's a cost. Do you think the notary is going to come by and go, hey, I'll sign it for free because I like you? No, there's always costs. The question is who pays for it. And if you're dealing with a loan officer who likes to hide the world from you, he'll say, don't worry, no money out of pocket. That's true, no money out of pocket. But you did pay for it. It's built on the back of the loan.
There you go. Team Sanchez, I want to refinance and put my house in a trust. Should I buy down the rate? I heard it's difficult to refinance once the house is in a land trust.
Well, there's some things here that you got to consult an expert. But there's usually a due on sale clause on all loans, almost all loans that I've seen. How about that? Qualified. Almost all loans that I've seen, there's a due on sale clause, which means the minute you say, hey, listen, this house was in my name. My name is Lee Duran. It's in my name, but I'm going to put it in the Lee Duran Land Trust. Well, it's no longer in my name now. It's now in the Lee Duran Land Trust, which has its own EIN number, and it's a different entity than Lee Duran. So the bank has the ability to go, whoa, 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 whoa. Back off there, Lee Duran. You can't do that. We want all of our money right now.
Wow.
That's called a due on sale clause, and that happens. It happens often. So be careful with that. Just be careful with it. Cool.
He hat Tim 3, 620 score. Sad, LOL. Income 105. All my credit cards are paid off. Only car payment 375. Can I buy? What would I qualify for in buying power estimate?
Wow. Oh, Mommy of 3, mortgage broker present. We got a bunch of Mommy of 3. Thank you for being here. We appreciate you. Hey, if you're brand new, we hope we teach you something. If you're highly experienced and you know more than us, please teach us something. Please. We actually want people
great.
to succeed.
They're going to tell you don't know anything every single
I
time.
know. They tell me all the time. Dude, if you go look at the comments on our videos, we got a lot of followers.
No. You
And
just opened up the
sometimes these guys
gates.
go crazy and tell us we don't know anything. And sometimes they're LOs, sometimes. And the truth is, we want you as LOs, loan officers, to succeed. We want you to. If you're a broker, great. If you're a direct lender, great. If you're my competitor, great. Actually, the truth is, if you're giving advice inside of my comments, I don't even block you unless it gets disrespectful. If it gets disrespectful, I just click the block button and you're gone. And I even tell some people, I'm like, hey, I know you're an LO. Appreciate you giving my people advice. If you keep doing this disrespectful stuff, I'm going to block you. One guy messaged me back and says, hey, I appreciate you responding. I'll stop that. And I let him on there. That's okay. I get it. The truth is, if you think we know what you're talking about, we do business in all 50 states, all 50. We're qualified for almost all the down payment assistance programs to help you with, and we have proprietary products to help you. But if you're brand new and you're learning, I want to help you. I really do want to help you. If you know more than me, prove it, please, and I'll sit down and learn. So,
105 income. What would you qualify for?
105. I would say you're starting 420, 430, 440, 450, depending on a few things. Tax base is a big deal. Right now in California, for some reason, insurance got ridiculously expensive. Like prohibitively expensive. So there's two factors that loan officers don't control, and that's tax base and hazard insurance. And those two things can change your buying power dramatically. So once I know where you're at, once I know your tax base, like some parts of California, 1.25. Some parts of Texas, I'm closing a loan right now, 3.7% tax base. That's a lot. I'll give you what that means in math. $500,000 house, probably $300 a month or $1,200 a month. Every month we have to add that on. So it changes your buying power.
Dang. I have an 800 and 700 score.
All right.
Income 138,000, no debt. What can I afford?
Which one are we going to use, the 800 or the 700?
So 8.
Yeah, I want to use the 800. Yeah.
Use my wife's. Use my wife's credit.
Use my best friend's brother. He's got good credit. Okay, so here's how it works. We pull what's called a tri-merge. Tri-merge is Equifax, TransUnion, and Experian. All three of them. We take the high, we take the low, get rid of them, we keep the mid. That's called your operating FICO score. Lenders have a different algorithm than most credit card reporting companies. It gets a little complicated, but it's like FICO 5, FICO 8, something like that. Don't need to know it all. It's stupid for you to learn it. But if you didn't get pulled by a licensed loan officer, you don't really know your credit score. And if you're saying you have a whole bunch of them, you don't really know your credit score. Because once I pull your credit, I'm going to go, you have an 800, and you have a 700, and you have a 750. We're getting rid of the 800, we're getting rid of the 700, and we're keeping the 750. So your score is 750. You don't just get to choose one. So we'll help you along the way. That's what we want to do. Jumping in to say hi. Nah, you guys are legit. There's enough business out there for everyone. Mommy of 3, we appreciate you. We hope to help you in any way you possibly can.
Ryan needs $1 million.
$1 million. You've been saying that since we known you, Ryan. You've been needing $1 million. I need $1 million too.
Would you recommend going LPC or BPC on a second home right now? A lender paid comp and buyer paid comp. She's a broker.
Yeah, I know. I get it. So let me think about that for a second. LPC or BPC?
I would say it just depends on your pricing. What's the better deal for the client?
Yeah, and the other thing that you really need to understand is that in this interest rate environment, I don't care if you're a direct lender, if you're a broker or whatever, if you actually strategically plan, there is going to be a refinance in there. So if you're going to do the refinance, you should factor that into the bigger picture and then decide whether or not you need tax write-offs, because that's going to be part of it. If you're going to that level, there's certain things that are write-offable, and you really need to do that.
Miami or mommy of 0. Do I need an agent buying a home through a builder? Oh no.
Oh, mommy no. 0. Oh, mommy 0. You just opened up a can of worms.
No.
Can of worms.
Oh no.
Here's what it is. Okay. Builders play dirty birdie. They're dirty, man. They're dirty. Do they want you to have a realtor? Hell no. They don't want you to have a realtor. They don't. You know why? Because there's a lot of money in this. Do they want you to have your own loan officer? No! They don't want you to have your own loan officer. Why? Because there's a lot of money in this. What should you have? You should have your realtor and you should have your loan officer. Even if you land up using the builder's loan officer, you should have your loan officer build that file so that that builder's loan officer has to compete and beat it. Sometimes they can. In this environment, they beat them, I'd say 40% of the time, about that, something like that. But the catch, here's the catch. They don't want you to have your own realtor. In fact, they play dirty birdie games and they go, hey, would you like to see our open house? Please sign in. At the bottom of that sign in, it says, I hereby affirm that I am not represented by any realtor. Damn. You didn't read that, but you signed it. You signed it. Damn. And when you say, hey, I'd like to have my realtor, they're like, no, when you came over here, you said you didn't have a realtor. Is that your signature? And you're like, yes. Sorry, you've already started the process. You can't have your realtor. And they're like, but please. Let me tell you why. There's a lot going on here. On a $500,000 house, there's the buyer's agent's commission, which is 3%. $500,000, $15,000. Wow. There's the seller's commission, 3%, $15,000. So between those two, that's $30,000, okay? So if they can get you to use their realtor, and then you're also going to be the buyer's realtor, well, they made 30 G's, just simple math, but they just 30 G's. Now, let's go to the loan side. On the front end of the loan, there's probably 3%. Varies from bank to bank, loan to loan, but 3%. So that's 15 G's. On the back end of the loan, which most loan officers don't even know exist. But when they sell off the loan to the secondary market, something called servicing rights, there's anywhere from 3, 4, 5, 6, 7%, but just call it 3%. So that's another 15 G's. So on the realtor side, there's $30,000 worth of commission. And on the loan side, there's $30,000 worth of commission. That's $60,000. If the builder can get you to walk in with no realtor, they get to keep all of it, because you won't even know to go to a different loan officer. You won't have a clue if you're being misrepresented. You won't have a clue. But the law, in most cases, and I'm not a lawyer, but the law in most cases allows you to walk in with your own realtor. The builders are just smart enough to go, hey, sign in to this open house so we know that you came. Well, at the bottom it says, I am hereby affirming that I have no realtor, and now you don't have any possibility of representation. I've seen this so many times, it's insane.
Everybody hang tight. There's a lot of questions here, and Lee talks a lot
about
stuff that you're not even interested in.
65 miles an hour.
I agree with you guys.
65.
I'm sick and tired of him.
65 mile an hour wind with 80 mile an hour gusts occasionally.
That's
cool.
exactly what I mean.
Cool.
Talking about nonsense. All right. Do I need, deep thoughts on TikTok?
Dude, deep thoughts.
What price point on an FHA? I make $125,000 a year with debt paid off.
You're probably starting at $580.
Damn.
$580, $590. Depending on your tax base, there's a few things that we have to factor in, but you can buy some house, no question.
This weird gunshot whole thingy says,
right.
Can I take out of my 401k for a home loan with no penalty?
Ooh, good question. You take that.
All right, here's what I'm going to recommend you do. You call your 401k company and you ask them if you can access the funds because you're buying a house, and they will give you the data. Every 401k company is different. You're actually going to ask 2 more questions. Okay, so 1, is there any penalties and fees? 2, you're going to ask how much can you actually access?
We got balloons.
Woo!
Balloons on Instagram. What's up? Thank you for the balloons. What's up? It's not even his birthday.
So first question was what?
401k.
But what was the question?
Can I access 401k funds?
With no penalty. Okay,
with no penalties,
First, you're going to ask your company if there's penalties. Second, you're going to ask them how much you can access. And third, you're going to ask them how long does it take. Some companies take a month. And if you're in contract, that could mess up your whole deal. So you're going to ask those 3 questions.
And the technical term in the loan world is TOW, terms of withdrawal. And the IRS does have a provision where you're able to take some out with no penalty. But it is governed by your 401k's rules. They get to set those rules. Yeah. Kristen Lee, net $1 million a month now. Brian, we love you. We love you. You're badass.
Is it not $1 million?
What?
It's not $1 million?
All right, cool.
I've seen that in person. That sign-in cheat scam.
It's dirty birdie, man. Those builders are
scam.
They're dude.
Daniel.
Dirty birdie.
Daniel wants to know if there's any programs in Texas.
There's a bunch of down payment programs in Texas. A bunch of them. And Daniel, we will tell you what they are. And then we'll tell you whether or not we recommend. Because a lot of people, we try and talk them out of it. I try and talk most people out of down payment assistance program if they can afford not to go with it. Because there's always a catch with down payment assistance. Always. Always. There's no free money. It doesn't exist. You're like, hey, the government wants me to own my own home. Kind of. But they're not going to give you any money to do it. That's crazy. That's straight crazy.
Ryan, please tell me why I was looking manufactured places in Anaheim, and one places was $200 and the other was $2,700 a lot. Oh, for the lot fee? Yeah, that's expensive, man.
Yeah, Ryan. Oh, crazy, man. Crazy, crazy, crazy.
Do buyers pay their own realtor commission? Queen Vicky. So, technically, the way it sits right now, the seller pays all the commission. That's what it technically looks like. But if the seller pays the commission and the buyer wrote the check, who really pays the commission? There's actually a big lawsuit going on right now because they're like, hey, how can you force the seller to pay the buyer's commission? What? You can't do that. And lawsuits have been won, and there's like billions of dollars floating around. It's semantics. It really is semantics. If you get a good realtor, if you get a top producing realtor, they're probably going to have you sign a buyer representation agreement, because if someone tries to cut them out, they're going to get paid. That's happening a lot right now, and your bigger coaching companies are telling everybody to do this in the realtor world. There you go. Thank you, Mommy of 3. She said, yep, first-time home buyer. That bullet thing name, what's the limit? You're going to call them, man. You got to call them and figure out how much you can access.
Yep.
Ryan, that's a real scam. $200 manufactured, but a lot fee of $2,700 a month. Laughing my ass off.
Yep.
Miguel Vasquez, where are you located?
I'm located right here, and he's located right there. Yeah, we're right here. Riverside, California. We do business in all 50 states. All 50. Not a lot of banks can say that. We can.
Buying a manufactured house is like buying a brand new car off the lot. Yeah, it's different.
Yeah, okay.
Elizabeth, agree.
Yeah, we agree with you too. I don't know what we're agreeing with. We agree with you.
This home buying stuff is complicated. I'm just going to buy a Z06 Corvette and live in my mom's driveway.
That's badass. I like that plan. Yeah,
hey, Z06 are a couple $100,000 right now.
Are they? 200 grand?
They're getting up there.
Really? Sure.
Was pre-approved for newly built and have a realtor, but I can't sell my place. Buyer gives $20,000 with them. Builder gives $20,000 with them. I have a solution for you, but you need to leave your loan officer in order to make that work.
What?
What's the solution, Lee? Do you know? Can you read my mind?
First-time home buyer, call Chris and Lee.
That's actually, I'll replace my answer with that one.
Yeah.
But I got another answer.
Okay, go.
Okay, so user 6213. A lot of people have this challenge, and they have to offload their property in order to get into the next. And their current loan officer is very limited, except when you deal with Chris and Lee. So what we would do is we'd put you through underwriting, get you fully underwritten, and then get you approved for our NAV Cash program.
Oh, TBD. I forgot about that. Dude, NAV Cash.
We'll get you approved for our NAV Cash program. So what we'll do is we'll buy you new build cash while you're still selling your existing. So if you want to make that move, give us a buzz. You know what to do. Yeah,
NAV Cash is a proprietary program. Proprietary means that it's only the banks, that's only New American Funding's gig. That you can buy it cash. That will put you through full underwriting, and then you're qualified for, call it $700,000. Well, then the bank will step in with their $700,000 and buy it cash. Literally buy it from whoever's selling it. Here's $700,000 in cash, and then immediately turn around and enter escrow with you and sell it to you. But you walk in with the power of cash. That's the NAV Cash program.
Big deal.
I don't know if anybody else has that, but New American Funding does. It's pretty powerful in the right situation.
Yep. Ryan, can you get me a loan for a Z06 for 30 years?
Ryan.
At 5%?
No. I don't think anybody can.
Can you back out after you sign an agreement? Ask Mommy of 0.
Mommy of 0. Can you back out after you sign an agreement? Yeah, you can, but there might be costs. So there's usually, when you first enter escrow, there's your contingency period. And if you have a good realtor, I'm afraid you're the one that went to the builder, but if you have a good realtor, the contingency periods in California are 17 and 21 days by the CAR contract, California Association of Realtors contract. So for 17 days, you can back out for anything. You don't like the color of the house. You don't like the foundation. There's a lot of contingencies. So you can just back out and get your EMD back. Now, the builder will fight you on it. They'll be like, no, you can't do that. Well, if you have a good realtor, they're like, yeah, we can. That's the law. I know how to do it. then there's usually a loan contingency inside of there. And the loan contingency is in California, usually 21 days. So if you needed to get out and you didn't qualify for the loan, your loan officer would say, hey, listen, after full underwriting, this person doesn't qualify. They do not meet the loan contingency.
Dang.
And because of that, you back out. But if you don't have a good realtor or a loan officer who understands this, the builder's going to tell you, sorry, you're about to lose your EMD.
Yep, mine.
Yeah. The builders are dirty birdie, man. Yeah. They're dirty. And they have the product. I mean, I get it. It's dirty birdie, but they have the product. They're investing their money. And they just take advantage of people. It's not a wonderful thing. What's up, Navy Mom Donna? Good to see you.
Woo!
Thank you guys on Facebook, Instagram, TikTok,
You can
and
see that?
YouTube.
All of a sudden you can see
I
that?
can see that.
All of a sudden.
All of a sudden.
All
of a sudden.
I think everyone wants a Corvette. That Z06
Yeah.
is a monster.
It's a monster.
But I also have my eye on the GT3 RS.
No way. Yeah? Yeah?
I am torn now.
Going Corvette?
I am torn.
Dude.
Between a Corvette and a Porsche.
Yeah? Okay.
Yeah. Will my realtor get her commission? This is on the NAV cash. Will my realtor get her commission then? If they did NAV
cool.
cash?
If they didn't have cash, yes, the realtor gets one commission. There's 2 escrows. And the realtor actually has to go to class. And it's like a 2-hour class or something that NAV puts them through. And they have to be in good standing and whatever. But then they go through the class and they explain to them the process of both escrows. Because it's a little complicated. New American Funding steps in, writes a big fat $700,000 check, now owns a property, but immediately enters escrow with the buyer that's already TBD underwritten, pre-approved. The realtor gets the commission on the first or the second one? First one. So the realtor gets the commission on the first one, and then you go through process, and then you fund, record, and that house is yours. There's actually a lease back situation, so you can move right in, and you're actually renting it from New American Funding while you're in escrow, but you get to move in. So it's kind of complicated. There's not a lot of banks that do that. It's very complicated, but it's a proprietary product, and you can kick ass. Yeah, we got some guys like one of our loan officers here, Ryan, killing it with this product because his market is like $1 million market, and they're doing it all the way up to $1 million. He's killing it with that product. It's a really good product in the right market. Some markets, not so much.
Ryan, you got a GT3? Nope, don't have a GT3. Got my eye on GT3.
You got an eye on it.
And the Z06.
And
I'm torn.
And when they drive both ways, he gets all weird.
Dude, it leaves my soul. It leaves my body.
His eyes go cross.
It leaves my
They
body.
go cross-eyed, and they go, what's the other? Not cross-eyed, but wide-eyed? Yeah, you get all wide-eyed and shit. It's all weird.
Do you do this with your eyes?
Dude, it's weird. You're weird.
All right,
You're
you
weird.
ready to hit it?
Yeah, you know what? We appreciate you guys. We're going to help you get a house in 2024. We've been Chris and Lee. We'll be back.
Peace out, Rainbow Trout.